a look at the S&P 500 as we get ready for Friday, October 2nd. Non-farm payrolls report in the morning and pre-market jobs report, some people call it. Here is a backed out look at the simplified daily chart, and I just wanted to show you this because this is where we are topping out right now so far on our bounce off of the September and Q3 low, right in line with the high that we struck in February, where we made an all-time high and then rolled over and sold off 1,200 points down to the March low from there. So we're right back here to where we were in February, trying to break through, and we're also trying to break through the September halfway back at 33.98. When we look at this same chart, but managed for closer viewing, this one here, yeah, screenshot, okay. Managed for closer viewing, you can see here we are. Here was today's high, right up against, just a look below, this 33.98.78, the halfway back point for the month of September. And you can see when you look to the left side of the chart here, in August, we came up and we were kind of struggling and trying to get over 3,400, and we just did it with a gap up open and go. And that's what led into our final all-time high, and high for September up at 35.88. And then when we came down, we filled in this gap and we churned back and forth here and tried to save it, but we finally just rolled over and sold off. And from that point where we filled this gap, we just doubled down to mark our low for September. And no, no, that's not the Q3 though. That's just the low for September. The September high is the Q3 high. The Q3 low is actually the July low at 31.01. But anyway, so here's our bounce now, and we have retraced 50% of the move now for September. So like what we did back here with this gap up open, that's my thoughts for tomorrow, that if the non-farm payrolls report is good, then maybe they're really going to juice it up because it's the last one that we get before the election. And if it's terrible, I mean, that's going to be awful for Trump. So I would think that if he's got any pull or way to get them to fudge any numbers or revise anything up, that's going to get done. And also the final market on close today was 1.7 billion to buy, and I didn't see that until after the close, that was the final market on close. But that seems to point towards us having a strong day tomorrow, or people getting long in front of that report. Anyway, this is our second close. Here's our first close and our second close above the 20 and the 50-day simple moving average. And so we are back up on top of the stack of all the simple moving averages for the first time since we were back here on the day that we made our all-time high, September high, and then part of the day here the next day before we fell under them. And ever since, we have been closing below them. Well, we've closed twice now below them, above them, the whole stack of simple moving averages, and now the 10-day is curling around and coming up. And if we can sustain this move up here, say above 33.60 to 33.63, even if we just sat sideways for a while, this 10-day would continue curling up. And once it crosses up through these other simple moving averages, it would create a new buy signal. So we have the sell signals when we have these cross down through each other. And this final sell signal was this one that happened this week with the 20-day down through the 50-day, but the market is actively trying to fend that off. So my thinking is that if we gap up open tomorrow after the non-farm payrolls report, that we will go after this 34.28 level. And I'll show you that, where that really roots itself in is on the weekly chart. And since it's Friday, it makes a lot of sense for us to take a shot against this 34.28 level. This was where we opened September week 1, and then September's week 2 and week 3, we came up against this level, and finally we gave up and sold off from there. So that 33.98 and then this 34.28 level, they look similar to each other when you just see them on different time frames. And then finally, let's take a look at the roadmap. You can see that we've got, what actually marks that 34.28.92 level was that was the high from the day of the Fed meeting. And you can see here on a daily time frame how price kept, open and held on here, but then fell down and it became resistance overhead. So if we can get up through this 34.28 level and close above it, maybe we're going to take a run even higher next week. Or if we have one of those crazy days tomorrow, like the June non-farm payrolls report, where we open and we take out 34.28, we could maybe take a run all the way at 34.54. I don't want to go to that place just yet, To me, I think it would be very bullish and strong to see us get up here and maybe try to close above 34.28 tomorrow. But if we at least come up here and take a look above it and then come back and close above 3,400 to end the week, I think that would be very bullish, and it would maybe not make people feel like we've come too far too fast. Okay, that's it. I promised to make this video short, and short it is. Have a great rest of your evening. See you in the morning. As always, good luck and good trading.